Saturday, July 11th, 11:05 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Discussing the stock sectors. We had stock sectors that made new high for the year. If you don't know, there's a difference between a stock index and stock sector. To the left is a watch list of the major stock indexes. The top one, the S&P 500. The second one, NASDAQ 100. And the third one, the Dow Jones Industrial Average. And then the fourth one, the RUT. Fifth one, the Dow Transport. And below that, Dow Utilities. So the second column to the right of the symbols is the price, how it closed. Look, a lot of them closed green. The SPX, aka the cash index for the S&P 500, closed green. The NASDAQ 100 closed green. The Dow Jones Industrial Average closed green. So three major stock indexes closed green. The NASDAQ 100 and the Dow Jones Industrial Average, those two stock indexes are part of the S&P 500. So again, the S&P 500 being the bigger stock index. The S&P 500 has 11 sectors in it. Here are the 11 sectors. Only one did not close green, XLV. So looking at the price of the stock indexes, the stock sectors, that's only reflecting a single day of price action. And we can see most of them closed green on the close of Friday. In the S&P 500, there's 11 sectors. We'll look at those 11 sectors. Great opportunity is if you manage your own investment beyond a 401k, beyond a mutual fund where you could, anytime during the business hours of the market, make an investment, dollar cost average. These sectors are one of the great opportunities, as well as the indexes. So this, again, is the S&P 500 cash index. 10 years of history. Each candle represents a month. So the current month is not done yet. But by looking at it, it's yellow. I have it programmed that my yellow candles simply means they didn't take out the high or low of the prior candle. Well, then that means we're still inside the range of last month. So when we look at the other financial assets, we can see if they're performing better or weak. But last month there was the all-time high of the S&P 500. That's very important. We know the current month, inside candle, haven't taken out the high or low of the prior candle. And we know last month was the all-time high. Dollar cost average. Anytime the market's open, you could add to your long-term investment portfolio fixed dollar amounts that you select. And you can outperform your 401k, your IRA, your mutual fund. Gives you the independence. So we're looking here at XLB. Same thing currently for the month, inside range. But the high of the year was way back here. So the stock index is outperforming this one, XLB. Again, to the left of it, it was the sector, it is materials. Materials, that sector, year to date, is not the biggest of the sectors. Yep. The basic materials, the market weight, it represents about 2.5% of the S&P 500. That's really small. Percentage. Communication services, same thing. Look at this, inside candle for the month, but it's been trending down for the year, which last month happened to be the new low for the year. And communication services represent 9.44% of the S&P 500. Again, when these are dragging down these sectors, we can see, again, what's hurting the stock index S&P 500. Stock index S&P 500, very broad, very diversified, good financial instrument, in my opinion, dollar cost average investing. Energy for the month, we broke the low of last month. The trend is down. The energy sector represents 4.29% of the S&P 500, again, very small. Now we're in the big boys, the financials. New high for the year. Outstanding. So let's update this. Can you believe that? The financials, again, the financials are broad. I say that because there's, again, if you don't know, each sector has industries in them. Some sectors may have more industries than another sector. So the financials, like I said, new high for the year, it's doing better than the stock index. The financials represent 13.7% of the S&P 500. That's a big percentage of the S&P 500, and it's doing a good job. It's outperforming the stock index. Technology. Wow, it's underperforming. Inside candle for the current month, and last month was the high of the year. So the financials are doing better than technology currently. And the technology represents 32% of the S&P 500. It's the largest sector in the S&P 500. So it has a big impact on the S&P 500. Industrial, new high for the year. Nice. It represents 11.11% of the S&P 500. That's a big sector in the S&P. Consumer staples, same thing, inside candle, way below the highs of the year. It represents 9.51% of the S&P 500. It represents, trying to remember off the top of my head, apologies. I'll get back to that maybe. Real estate, wow, inside candle for the month. Last month was the new high, way below the highs of 2021, underperforming, not good. It represents 2% of the S&P 500. The utilities, where we took out the high of last month, still below the highs of the year. The utilities represent 2% of the S&P 500. Healthcare, wow, new high for the year. Who saw that coming? You paying more in insurance premiums? Are you getting less service for your health insurance plan? Are any of your healthcare products costing more? That happens with inflation. Even though there's politicians that play on the fear, hate, anger to make you believe otherwise and blame it on someone else when you have power and charge that could be doing more to help the most amount of people. So again, look at this. New high for the year, doing better than the S&P 500, doing better than technology. Who saw that coming? Healthcare represents 9.11% of the S&P 500. Just think if you break this down, look at what sectors are doing the best inside of it. And within that sector, if you break down, look at what industries in this sector are doing the best. I'm looking on that right now on another screen. Amazing. Consumer discretionary, inside candle for the month, look below the highs of the year. Wow. Again, back here at the S&P 500. So that was just the monthly. Let's dissect it and take it to a lower time frame. See how it worked for this past week. Let's first look at the S&P 500 weekly. 5-year chart, each candle's a week. Higher high, higher low than last week, trending back up. All-time high was ripped there. Yep. So that's the current situation. For the week, higher high, higher low, trending up. I'll share you some more insight. I'm going to put this on a daily. There we go on a daily. I'm going to load up the daily drawing. So dissecting this to the daily time frame, here's the high of the year. That was quite some time ago because these white vertical lines were the FOMC meetings. And I'll show you some other insight. My Patreon members know, at least one of my ones, my higher levels. This green candle here, we had the reversal here, trend up, high, failure to go higher, trend down, selling off. I bought. So I'm in a current bullish position, have gains, and I bought this day. And I shared that with my Patreon members on my WhatsApp group. So happy camper, have gains in a winning position. Well, let's take this to the other sectors now on the weekly. XLK. Big consolidation here. They closed green for the week. Healthcare. Again, Friday, all-time new high up here. Outstanding. Financials. Again, new high for the year. So we have healthcare and financials, new highs for the year. Made this past week. That's the leadership. New highs. Opportunities to buy dollar cost average. Consumer discretionary. In a big consolidation. Trending down. Not healthy. Communication services coming off the lows of the year, but we're still below the high of the year. Industrial. Nice. New high for the year, new high for the week. Outstanding. Consumer staples, not looking good. Energy, yeah. A lot of distribution, looks like. Utilities, same thing, looks like distribution. Real estate, way underperforming, not healthy. Again, look at these back-to-back 2 inside candles up here. Looks like distribution. And materials, big red candle off these highs. So again, we have the weekly chart of the S&P 500 trending back up to the high. And I showed you 3 sectors made new highs for the year. Those 3 sectors, I also mentioned what their weighted average is. Yep. They represent a big percentage, especially the financials. So I did mention there's industries in each sector. So I'm going to break this down a little bit more. I have a separate video explaining much more in detail, but I'll do a little example here of stock index, stock sector, and breaking that stock sector down. Pulling it up as we look for it, as I look for it. There we go. So we have 4 grids here. The far left is the NASDAQ 100. Again, these are weekly timeframes, 1 year. This is a stock index, the NASDAQ 100. You could do dollar cost average on it. The symbol stock ETF is QQQ. Or you could do the stock sector, XLK, which I told you is technology. And then within the stock sector, XLK, there's industries. Cell industries. Yep. Well, one of the industries in the technology is semiconductors. You could do the individual stock dollar cost average, or you could buy a stock ETF that's managed by someone else. One of them is a very popular one called SMH, It buys semiconductor companies and makes the index. Again, it's industry in technology, but it's semiconductors. Look at that here. Nice. So you notice 3 weeks ago, it made a new high for the year. That means it's doing better than the technology sector and better than the stock index, dollar cost average investment opportunities. Here's another sector. Here's another industry of technology on the far right. This is memory. Yep. Memory. Hardware. Again, two big components of technology. Semiconductors and memory. And look here again, past 3 weeks made the new high for the year. So you have the SMH, semiconductor stock ETF, and the DRAM, memory stock ETF. Each of those 3 weeks ago were the highs of the year, outperforming the stock sector and outperforming the stock index. Still diversification because you're not buying just a single company. But when I take this back down and show you again the past week on the stock index, again, here's a weekly. The stock index on the weekly, S&P 500, it's trending up. I just showed you those three other technology, SMH, DRAM, they were not trending up. So the S&P 500, very diversified, and it has those sectors. Opportunities to do dollar cost average. So again, anytime the market's open, you can make a contribution in the good leadership positions faster than someone that's managing your investment. Again, if you outsource it to a 401k, a mutual fund, you're giving that responsibility to someone else that has a longer time, a slower time to react, and not necessarily in the winners, but they're definitely charging you fees. Win or lose, they are charging you fees. And they are not sending you a letter saying, sorry, we didn't do the best for you. Again, opportunities, dollar cost average. I just showed you some of the best financial instruments compared to some of the underperformers for the year to date. Thank you as always, spending just a little time with me. That's it for the video. Thank you for your support. Thank you kindly for watching.